Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, everyone. Ira Epstein of Linn & Associates with your end of the day financial update. And this is for Wednesday, the 22nd of March, 2017. And we're just now getting on to 4:45 p.m. Central Standard Time. Well, the boards are still up because in 2 minutes they will clear. You can see a mixed day in stock indices. The gold market up against the silver. Copper market bounced beautifully off the 100-day average of closes and found its support there. The dollar's still lower, mixed currencies, and the markets are worried about one thing. That thing that they're worried about right now is what happens if the vote in the House of Representatives tomorrow either passes or fails. Either one, going to create an event. Right now, what we have going on the E-mini S&P 500 index is the market has been falling. And I think you can see that. And I'm labeling it on a down thrust on the weekly chart. You'd have to get up through 2401 to make me think different. I could argue that it could also be part of it getting through last week's high of 2392. They're not too far apart, those points. When we take a look at today's close at 2342.5, you're right where you're at there. That's what I'm trying to show you. Not going one way or the other, but on a closing basis on a daily chart, still in a downtrend. When we just look at a bar chart with nothing on it, you can see you had the sideways action and you're trying to break out to the downside. And when I put on the swing lines, you get these patterns of lower highs and lower lows, which is the first bearish pattern we have had in a long time on this chart. Now, what makes it interesting, it's the bearish pattern, and the market is under the 18-day moving average of closes, which implies that on rallies, this 2367 area most likely is going to be where the bears make their stand. Seeing today's break carry as it did yesterday into the Bollinger Band, no surprise. Is the market going to be able to break out to the downside, or is the market going to find its legs here, just widen out this trading band? Well, if you take a look at slow stochastics, you're oversold. The problem with all of this chart action is if the vote takes place tomorrow, and I say if because we don't know if the Republicans will call the vote off or not, but if the vote to start dismantling the Obamacare takes place, pass or fail is going to impact this market because of the political currency that it carries with it for, if you will, tax reform, Dodd-Frank reforms. I can go on and on down the list. The president got something of a break today, no question about it, when Mr. Nunes came out and said that there was, in fact, surveillance. I don't care the reasons why there was surveillance, and they're caught up with that on TV. There was surveillance going on at the Trump Tower, apparently. And if that is the fact, all the rest doesn't matter. All that the president said was there's surveillance. Now, when he says by Obama, I doubt that he meant by the Obama individual president. I think more likely it had to do with the administration, and somebody, in order to do surveillance, had to sign off on something. I'm not defending Mr. Trump, just saying the reality. So he got some political cover. Whether that's demolished by the time we wake up in the morning, I have no idea. But that's also what supported the market a bit today. When we take a look at the Dow Jones Industrials on a daily bar chart, you can see how the market fell down to the lower Bollinger Band, closed under it, and again that question, is it going to be able to break out to the downside? If it's going to, it will most likely, both here and the S&P, be accompanied by even further breaks in the slow stochastic that eventually embed. Embed means for the first time we'd get a pattern that's a flip-flop of this. This is the best way to show it. Here you were going sideways over, and if you looked at prices, they were just rallying. I mean, you all know that this market has been in a monster rally for years, and it just continues, and especially since the night of the election, when we saw that the Trump presidency had actually prevailed, had won the day. First the market broke, then it came back rather dramatically. Well, This would be, if it ever embeds, the first big bear signal the market would have. In the NASDAQ, like the other indices, the swing line is down, prices under the 18-day average, although it gave the market a real run because it bounced off that lower Bollinger Band and had a heck of a rally intraday, but we are going sideways here. So I'm going to again say downside bias because you're under the 18-day average, trend down, and on this market, you're not oversold. When we get to the Russell, it joins the ranks of the S&P and the Dow. Down to the 100-day average, the lower Bollinger Band, very oversold, not trending in this case. You got a higher high and a lower low. Everything tomorrow is going to hinge on how this all goes. Now, one of the things I've been trying to point out is you've got to keep your eye now on the VIX. It might be very important finally. Why? Because for the past year, of all of 2017 and the beginning of 2016 rather, in December, you began going sideways. If you break out to the upside, what it means is what? Bearishness for the stock market. And with this size base, it could be a heck of a breakout to the upside. The market today is right into the 100-day average in the upper Bollinger Band. The market is in overbought territory. Does it get thrown back and hit the 18-day average again? That'll be the big question. But I'm watching all of these because I'm not getting bullish signals in the stock market, and this could be knocking on the door of saying that it could be something more. We'll see what happens. In the bonds and notes, all this uncertainty has caused a flight to this market. You're no longer about the 2.6% that you were here. You're around 2.4, but you're up in an area that is the first key resistance, the 100-day average of closes, and it's going to be masked above it or matched in some manners with resistance at 151.24. So I'd be watching that. This is a rich zone in this market right now. Same true in the 10-year. Look at how you're up here. Trends are up, but this is where I think the pros are taking money off the table. Same from here up to that upper Bollinger Band there. In the dollar index, you continue to run the lower numbers. And as I've pointed out, I think that this is part and parcel of what's going on. First of all, our president would love to see a lower dollar. I'm not saying he can get it. But don't you find it interesting that since the Fed has said they're going to be raising interest rates, that this market has done one thing, it's reversed course and fallen. It's just fascinating as can be, because that's not what you'd expect when you hear the Fed chair say we're embarking on more rate hikes. Maybe it won't be as quick as you think, and that's what the market could be saying to us here. You could embed, and if you do, it could be a son of a gun trade to the downside. Same thing, flip-flop happening in the currency. Euro, getting up and over the upper part of the 80 reading here. You get a couple of days like that, and you embed, and that could go even higher. Right now, you're running the upper Bollinger Band in the euro, which is the flip-flop of running the lower band in the dollar. Both of these markets are trending, and again, depending on how the House vote on the dismantling of Obamacare goes, a lot of this is going to be wild tomorrow. British pound didn't even blink an eye today with the terrorist attack that took place near Parliament, right up to the upper Bollinger Band, trading now in between the 100-day average and that Bollinger Band, and overbought. Certainly doesn't look like a currency that's worried about Brexit on the 29th of the month. And yet if you read like I do all day, you're hearing EU members, and they said they're determined to give the Brits a really difficult time. We're going to see what happens there. In the June Japanese yen, well, the nervousness of all this has got this market, and it's being bought, just like the gold market. Higher lows, higher highs. Now you're up and over the upper Bollinger Band in overbought territory. The odds of staying up here like that, not strong. So be careful. Only 5% of the time do you stay out of the bands. But in order to break the bands into a trend one way or the other, they have to break out that way at first. And you could see that when you got narrow here and then you got up and you start kicking them. So don't think that's anything unusual. Here's an unusual event. Look at how crude oil keeps falling. This is with the Saudis continuing to talk about cuts. Now, there's something here where either I'm a little nuts, which probably is the case, or you are. I saw the Russians come out today, and Their minister's saying, yeah, they might be in favor of more cuts. Come on, Russia. You were supposed to cut 300,000 barrels a day. You've cut 167,000. They're halfway through, more than halfway through now, the cut period. You still haven't met your 300,000, and you're talking further cuts. Why haven't you met, like the Saudis have met, their part? And that's the problem that you're seeing from a lot. Iran's in favor of cuts. They don't do any cuts. Iraq's in favor of cuts. They don't do any cuts. I'd be in favor of cuts if the Saudis cut and I can get more money for my oil. Why not? At the expense of I'll take market share from them. And I think that's what's really going on. And that is what I think the market realizes is going on. And it's one of the reasons for this big fallacy break that's taking place in it. Now, when I say fallacy, the fallacy was getting everybody long thinking it would go up. Go back and take a look. In November, they mentioned where oil prices, they were going to do the cuts, and the market ran up rather dramatically to the $55 area plus. You're now back down to 47, and if you take a look at when the announcement came out, you're about $1.50, $2 away from that low point on some of these back months. Very interesting. If you go to the front months at that point, on a cash basis, price is probably now about where that was. You've got to add premiums in it sometimes when you get to these markets. Rebob gasoline, back and forth action, but the loss of the embedded reading now for several days, for 2 days in a row minimum. Well, what that does is it tells me that price and the 18-day average are likely to come together. Add to that the seasonality, and I don't know that being on the short side of gasoline is the smartest play you can have. And in the nat gas, not gasoline, you got up to the point where I thought the reaction was going to set in. The 100-day average and the upper Bollinger Band overbought. That's probably the point. Let me turn off my phone, which I'm going to do right now for us. Hold on a second here. Why do this all over? As we take a look, you can see the boards have finally cleared on us, but what hasn't cleared is your more research. Now let me explain to you the More Research Center and what it is. They have computers that go back and look at every day, and the computers say, gee, if I bought on this day and got out on this day, what did the market do? Don't ask me the algorithms and all that they do it, because I'm not the More Research Center. But what I've used it for decades, and I want to go on record, I have used it for decades, is that it's helped me understand the seasonality, be it in the grain markets at certain times of the year, demand that might show up for the energies at certain times of the year. I like to know that. Then I like to see, is there a seasonality, be it in the, and I use futures, not the spreads, but a lot of people are spread traders. Is there a seasonality to that? Does it follow along with the fundamentals? Well, they put this all together, and then they give you a written commentary about it all. I want to make this clear, would never tell you, make a seasonal trade just on this. Use it in conjunction with other things, whatever they are. They'll tell you that. That's the way that this tool comes alive. And they'll give you a 2-week trial for free. Why not take advantage of it? You can even go on their computer, by the way, and play with the charts, take off 30-year patterns, just look at 5-year. And you say, what if I think just bullish patterns work? You can do that with it. Take advantage of it. 866-973-2077. That's our number. You see it on the bottom of the screen anyways. You can go to our website. You'll see the carousel of free offers. Choose it. You can click right up here at any time. If you're watching me on YouTube, our form will appear. Mark down what you'd like to get. We'll forward everything to them. And under us on many other websites, you can do that as well. In the meantime, I'm Ira Epstein. You have yourself a good day, a good evening, and get ready for tomorrow. If there's a vote in the House of Representatives, it's going to create a lot of action. Take care now.